on the AMC saga taking another turn. The stock tumbled as much as 30% yesterday, ending down about 18% after skyrocketing the day before. While that was happening, Tesla and the FANG stocks came under pressure, all falling in yesterday's session. Joining us now, Joe Terranova, Senior Managing Director at Virtus Investment Partners and CNBC contributor. You're here, I guess, presumably to talk tech, but do you ever get tired of it, Joe? And do you ever just think maybe some people could be better served by just taking a step back when we get the levels where we are and maybe look at all the other things that might be attractive in the stock market?
Without question, yes. Unfortunately, there's rampant speculation currently going on within the markets, and unfortunately that's leading investors to turn into traders and to try and find opportunity, whether it's in cryptocurrencies or a lot of these do-it-yourself stocks. But you're right. You know, I think, Joe, at some point, either today or early next week, we'll be talking about $70 WTI. There's certainly a lot of opportunity right now in the energy sector and the financial sector. Goldman Sachs, JP Morgan, Citigroup continuing to make 52-week highs. So I think the picture gets clouded, as you rightly identified, by, you know, this ability for rampant speculation to take hold. So people don't need to always be playing in the FANGs stocks. Should I buy here? Should I sell here? Is it a trading opportunity here, or should I be, selling the rally here? Would you step away from it right now and focus on some of these areas that you're talking about, Joe? If you were, if you had to trade. Let's think about for a second where this excitement towards trading began. It began last year with the FANGs. It began in Amazon and Apple and Tesla. And at some point, the volatility came away, and therefore traders moved towards another direction where there was higher volatility and they could take advantage of that. I think investors stay with Microsoft. Investors stay with Alphabet. Investors stay with Apple and Amazon, but understand they might underperform in a year where markets are focused on a reflation recovery, and the injured and impaired industries from 2020 are not going to outperform. But when you have over 30% exposure towards technology, Joe, you have to find allocation somewhere, and you want to look at the strength of a balance sheet, buybacks and free cash flow generation, and you'll find Alphabet, Microsoft, and Apple all providing that for you. So an investor stays allocated towards there, but traders, no, they're not going to identify the momentum that they need to take advantage of short-term pricing gains within the market. In previous summers, and I'm not talking about last summer, but in a normal summer, do you become less engaged? Normal? Are you part of the summer doldrums, you and all your friends? And what are you expecting this year, since everybody really might want to go to the beach or get out since they haven't in summer? Well, Joe, I picked up golf last year. I'm scoring at about a 120 to 125, so that keeps me in the office. We could compete. Unfortunately. Yeah. Yeah, I'm not very good, so I have no desire to get out of the office. But I do think what's going on in the market right now is that we're awaiting earnings. We're trying to understand from corporations if this debate between reflation or inflation is actually real, because the April earnings report would suggest the inflation argument does not have validity just yet. So I think earnings are incredibly important. We're in a moment where we're kind of sitting and waiting to hear what those earnings are going to look like. But I think you're right. I think historically markets tend to calm down during the summer, and I see no reason why we wouldn't do that heading into our earnings in July.
Shepard Smith here. Thanks for watching CNBC on YouTube.